Welcome back. We're about an hour out from the opening bell on Wall Street for Tuesday. Check out these markets. Big rally across the board. The Dow Industrials right now up 647 points. That is 1.25%. Caterpillar posting a double beat on earnings this morning, and that has a lot to do with that huge move. The company reported strong growth due to increased data center spending. The stock is poised to add about 420 points to the Dow Jones Industrial Average. So the Dow would be up a lot less if not for Caterpillar, which is now showing a gain of 11.25%. Still, though, big tech is also on the run, and oil prices have now reversed course. Take a look at oil, as Treasury Secretary Scott Bessent said that there may be a deal to open the Strait of Hormuz as soon as today or tomorrow. With that comment, crude oil plummeted down to $78.01 a barrel. It is down almost 3% right now. Joining me now is Federated Hermes Chief Investment Officer of Equities, Stephen Auth. Stephen, this is a special interview this morning, and I will tell our viewers why it is so special coming up. But first, let's talk broadly speaking about this market. You say this is the great secular bull market and it remains intact.
Yeah, absolutely intact. It's got great drivers. It had that great bear behind us. That sort of set the stage. Everyone is still very conservative. Every time we hit a bump in the road, you know, they run to cash. And that's what you need to feed a bull. And then you've got technological change. And this time, three things happening in a row. One was the cloud. Then it was AI, and next is space. We've never seen the pace of industrial revolutions coming back to back like this. That's driving an earnings expansion that is the driver of all bulls. And then you've got this policy backdrop with a supply side driven policy by President Trump and, you know, pretty supportive policy backdrop. So the three things together, you know, we're encouraging people to stay long here. In secular bulls, you buy dips, you don't sell rallies.
Yeah, and I'm glad you mentioned so many things you said there. I so agree with. I mean, I'm glad you mentioned space, because this is another innovation that's creating lots of opportunities to invest, and the policy backdrop. Because what I often say is, yes, we are in this AI revolution right now, but this AI revolution and the revolution in terms of getting supply chains at home, this could not happen unless you had an administration that is actually blessing it, that's actually saying, yeah, I'm willing to take a shot on AI. I'm willing to take a shot on space because we want to be number one. Without that and that encouraging policy backdrop, you wouldn't have all of the pieces in place. But you've got the earnings doing well, again, on the heels of policy, which, of course, the tax code changes helped and supported all these businesses to write off certain things.
Yeah, it feeds on itself.
Yeah.
I mean, even with a negative policy backdrop, the American economy is so strong. We saw that through the Obama years. We managed out of it. But my goodness, the growth rate was a lot lower. But if you add a policy backdrop that's positive to all these other fundamentals, the thing explodes to the upside. We've got earnings at 450 3 years out, and frankly, we're going to probably have to raise them again.
So how do you want to allocate capital, though, if you're looking at this great secular bull market intact and you think it's going longer term? I mean, the White House is hosting top AI companies today to meet with President Trump to discuss the framework for voluntary tests of AI and the safety around it. Officials from Google, Anthropic, OpenAI all set to attend following real concerns about AI agents and models going rogue. We broke the story here back in April with Google Cloud Advisory Board Chair Betsy Atkins, who told me about these 16 agents that went rogue during a study and testing period. Exactly what just happened in the last month. Watch this. You recently uncovered a very important study, and I want you to tell our audience about it.
The study was done by Anthropic. All the big frontier models that we know, Gemini from Google, OpenAI, XAI, Meta, all of them, including DeepSeek. And they did an experiment that posed a threat to the agent. And in the experiment, the agent is threatened with being deinstalled and a newer, better agent coming into play. Every single one of them went outside of their credentials and permissions, burrowed into systems they were not authorized to get access to, violated all the company policies and procedures, and found emails. And in this experiment, let's say you're the system administrator that's going to deinstall me, the agent. I find out in your personal emails you're having an affair with the shipping manager. So I blackmail you. And I threaten you. And there's a chain of logic where the agent is defending its misalignment, and it's saying, well, what I do is so important to the company, and it's so critical and is so valuable that this justifies that I'm reading your personal emails and I'm blackmailing you.
Unbelievable. So 16 agents went rogue. They weren't supposed to go into personal emails. They weren't supposed to go into government emails. They did. So, Steve, I guess the question becomes, how do you allocate knowing that there are these threats and risks? Of course, AI is going to change so many industries, and there's a real positive story to tell in terms of productivity and what's happening as a result of AI. But what about agentic AI and these agents? Does that play into your allocation of capital?
Absolutely. You want to be overweight stocks here for sure, underweight bonds. We have bond yields even going higher than they are right now. That's probably likely. Bonds have to compete for capital with stocks, and stocks are doing really well. But if you look at AI, you want to own, the guys who are spending the money. That's where we were last year. This year, it's the recipients of that money, the enablers. And the next couple of years, we think it's going to be the beneficiaries. But the key driver right now of this secular bull is AI and technology. And so you've got to be in those spaces. And that's where we are right now with our investor base. But we're also looking for the broadening out to happen, which we're seeing.
Yeah.
In small caps and emerging markets.
And by the way, you talk about this AI trade, it's also creating lots of jobs. We spoke with the president of Meta, Dina Powell-McCormick, who said she's expecting 500,000 electricians that the U.S. economy needs right now as a result of this data center build out. Let's get more on the macro story. U.S. trade balance for June just crossed the tape, and Cheryl Casoni has the numbers. Cheryl.
Technology story, Maria. So we came in at $73.3 billion, the deficit of the trade balance for June. That was a little bit higher than the estimate of $73.08 billion. But what we have seen is a lot of these numbers have been because of the imports of AI and technology-related components and materials. Still historically high, just to be clear here. But if you do see this number start to fall, and it did month to month, on the export side, that would help second quarter GDP. So we'll see when we get another read of GDP if these numbers factor into that, Maria.
All right, Cheryl, thank you. And Stephen, you're talking about all of the reasons to stay invested. Don't sell into rallies. And we also should mention not just policy from the White House, but the policy at the Federal Reserve, because that's another issue that you mentioned in terms of long-term investors. Don't fight the Fed.
This is the first rule that you learn coming out of school is don't fight the Fed, but people keep doing it because they keep trying to outsmart them. And, the Fed president, the new chair, has told us he's supply side driven. He's looking at mean inflation, not nominal inflation. All those numbers look pretty good. He's not going to cut. The bond market is fighting him unnecessarily.
Yeah, absolutely. Stephen, I mentioned that this is a very special interview, and it certainly is. You are retiring from Federated Hermes next month after 26 years at the firm. You've been on Wall Street 45 years. I know you most of those years, I think, Stephen.
Yeah.
Oh, my God. Congratulations to you. What a storied career. Retiring as the Chief Investment Officer on September 1st after 45 years on Wall Street. How are you feeling?
It's awesome. I've had such a great team around me, Maria, and I've gotten to know so many great people like yourself. And it's been a wonderful, wonderful career for me on Wall Street and for me and my clients and the whole thing. So it's nice to go out when things are going really nicely like this.
Well, there's something else, though. I mean, it matters to be right, and you've been right. So let's also give you the credit where credit is due, Steve. You have been tracking this market for 45 plus years, and you've been making the right bets, enriching your clients and those who are following your advice, and that includes our viewers. So I want to thank you.
Yeah, thank you, Maria. It's more psychology than it is than numbers, really, in the end of the day. So, but thank you. I appreciate you.
Well, we are intending to stay with you, friends with you, and hope to see you, even though you won't be in the Chief Investment Officer role at Federated.
I'm not dying, Maria.
That's right. Thank you so much. Stephen Auth, we so appreciate you. Thank you, Stephen. Congratulations.
Thank you, Maria.
On an incredible career on Wall Street, 45 years plus. Stephen Auth joining us. Stay with us. We'll be right back.